Student loan payments resume next month, so let's figure out what we need to do in order to start paying in October. Hi, and welcome back. I'm Kamika, and this is Well Balanced Wallet, where I help you create healthy money habits and live a life that you love on your current budget. Today's video is basically me going through the steps to figure out everything that we need to know about repaying our student loans starting next month. Let's jump to the computer and get started. Okay, we're at the computer, and the first step is to go to studentaid.gov. So now that we're at studentloans.gov, we need to click on restarting payments. And this page is basically like a cheat sheet to show you everything that you need to do to prepare for starting your student loan payments again next month. So the first thing we need to do is update our contact information. So we're going to do that through studentaid.gov. Click on that little link and you log in with your credentials. Okay, we're logged in. We want to go to this contact information link on the left hand side. Look through your contact information, make sure everything looks good. If it's not, update it. That way you don't miss out on any information that you may need. Next, a lot of people's student loans got sold or moved around during the time that we weren't paying loans. So you may have a different servicer than you had when you last paid student loans. I know I do, and Care also has a different servicer than what he had before. So in order to find out who has your loans, you'll click on your name at the top and then click My Aid. And once you get on this page, it'll give you all of your loan information. If you scroll down, you can see the different loan types that you have. And then at the bottom, it will tell you who your loans are serviced by. So my loans are serviced by Moella now. And the last time I paid to Great Lakes. So like I said, you may have a different servicer, and this is exactly how to find out who your servicer is. From here, you can click this button here that says Pay on Servicer Website. And it'll take you directly to the servicer's website. And this is where you will sign up if you haven't ever signed into this servicer's account before. And you may have like an email or a paper letter that gave you instructions on that a while back. If you don't, you can register here and it will give you all of your payment information. So I'm gonna click off of this pop-up and sign in. Okay, so once I sign in, it's asking me to verify my information again on this site, because the last time I verified it, it was on studentaid.gov. And then I'm just going to click continue. And wow, I have a lot of alerts. But this is my actual student loan information, and it's going to tell me what my payments are and when they're expected to start. Okay, so if I scroll down, I see that it looks like my monthly payment is going to be $282.88. And my current repayment plan is the income-based repayment plan. So with this information, we can move on to the next step, which is to find the correct payment plan for your current situation, because a lot of things have changed since the last time that we paid student loans, and they've also added a new payment plan. So I'm going to open up our studentaid.gov back on this other tab here. I'm going to hover over loan repayment, and then I'm going to click on repayment plans so that I can check out all of the different plans and choose which one I want to be on. And they have this handy tool here called the loan simulator. If you click here, it'll actually do the work for you. So you click on which option you need, which is I want to find the best student loan repayment strategy. And then you follow all of the prompts. Once you enter all this information, it will give you what your payments could be on each of the student loan repayment plans, which is very helpful. I've already done this for myself, and the information that I needed was some numbers from my tax return. I needed information from my husband because we filed jointly, and I needed, I think, a couple of things from my paycheck stub. Once I filled out all of that, it gave me all of my options. And honestly, I think I'm going to stick with the income-based repayment plan, which is what I was already on, because my circumstances aren't that different. and I honestly don't feel like applying for another plan, but do what's right for your situation. So I'm going to click back, and then we'll take a look at some of the repayment options, just so you'll know going into it. So first up, we have the standard repayment plan, which is a way to pay off your loans within 10 years. So your payment is basically going to be the total amount that you owe divided by whatever number it gets you to make 10 years worth of payments, and that'll include your interest as well. So for this plan, you're going to pay less money over time than other plans, because you're not going to get the same amount of interest that you would get if you had a plan that was drawn out longer than 10 years, which makes sense. Next, we have the graduated repayment plan. So this payment plan starts you out with a low payment, and then as you earn more money, your payments are gradually increased to an amount that will also help you pay your loans off within 10 years. But since you start off paying such a low rate at first, you are going to pay more over time than you would pay on the standard plan. But it does give you a little bit of time to start increasing your income, because you start out with the low payments and then they increase it as the time goes on. So that's that option. The next option is the extended repayment plan. And this plan ensures that you're going to pay your loans off in 25 years. So with this plan, you can either have fixed payments throughout the duration, or you can have graduated payments, which is starting off low and raising the payments gradually. The benefit to this plan is that you'll pay lower monthly payments overall than the standard or graduated plans, but you will end up paying more money over time throughout the duration of your repayment than the other two plans. Next, we have the new plan, which is the Save on a Valuable Education plan, or SAVE. So with this plan, your monthly payments are going to be 10% of your discretionary income, and they're going to use your income and the poverty level in the state that you live in to come up with this number. Now, if you don't want to figure out all the information on your own, studentloanplanner.com has created this handy little calculator. So if you go to studentloanplanner.com/discretionary income definition, and I'll put the link in the description, you can come to this calculator, put in your family size, where you live, and the poverty level for 48 states or DC is the same. It gets a little bit different in Alaska and Hawaii. So you choose where you live, and then you put the amount of your adjusted gross income from your tax return. And then it's going to ask if you're married, because the limit will be different if you filed jointly than it would be if you filed as a single person. So you put that information in, your spouse's adjusted gross income, and then it will give you your discretionary income for this new plan. So what you'll do from here is, if you only have undergraduate student loans, you'll multiply this number by 5. If you have graduate loans only, you multiply the number by 10. And if you have a mix of undergrad and grad loans, you'll take the weighted average between 5 and 10% based on what percent of undergrad loans you have. That sounds a little bit confusing if you have undergrad and grad loans, but it's a quick way to figure out what your payment could potentially be on the SAVE plan. But also you can use that loan simulator to figure that out as well, because it will give you that amount on that calculator too. So back to the plans. So this plan takes the place of the repayee plan, which was a plan that we had prior to COVID, and it's made that plan a little bit better. The big thing to take away from this plan is that you have the opportunity to have the rest of your loans forgiven after you've made 20 full years of payments for undergrad, or 25 if you have grad loans. But be careful, because you may have to pay income taxes on any amount that's forgiven based on your state. So keep that in mind. This is a good option for people that are seeking loan forgiveness. And then this plan, the pay-as-you-own plan, I believe it's the same as the plan that got absorbed into the SAVE plan. So you'll get, your payments will be 10% of your discretionary income, and then you'll have the option to have your loans forgiven at the end of the term. Next, we have the income-based repayment plan, which is the plan that I'm on. And this plan will make your monthly payments either 10 or 15% of your discretionary income, depending on when you first received your loans. So you'll have your payments recalculated every year based on your updated income and family size. And you do have the option to have loans forgiven at the end of a 20 or 25 year period, depending on when you got your loans. So with this plan, with many of the plans, you're going to pay more over time than you would pay on that standard 10-year plan, the very first one that we looked at. And then there are a couple more plans under here, but I don't know if they're as common. So you can take the time to read those as well if you're interested in that. And I believe all of these are included in that loan simulator. Okay, so I think that's all we need from studentaid.gov. We know where our loans are. We have updated our contact information. We know who our servicer is. We've seen the amount that our servicer thinks that we may have to pay. And then servicers are required to send out payment information at least 21 days before the first payment. So be on the lookout either in your email or your mailbox for information on when that first student loan payment is going to be due and the amount that you will need to pay for that. So I think we're in a pretty good place right now. We have an idea of what's going on, done the simulator, chosen our repayment plan. Quick note: if you did the simulator and you decided that you want a different plan than the plan that you were on previously, you'll have to submit certification documents for the new plan. So basically an application to be put on the new plan. So keep that in mind. I'm going to keep the same plan that I was on, and I believe Care was on the same plan as me, so he'll probably keep that as well. Moving on, the next thing we need to do is prepare our budget for adding student loans back in, because a lot of that money has been absorbed into your daily things, plus the cost of things has risen in the past 3 years. So that money may or may not be available to you anymore. So what we're going to need to do is take a look at our budgets, make sure that we're going to have enough money in our budget to pay these student loans. And if not, we'll have to figure out a way to either cut some expenses, increase our income, or apply for assistance that's available for your personal situation. So if you take a look at the last budget with me, the September budget with me that I posted, and I'll link it here, I was kind of going through the thought process of how we're going to add these loans back into our budget, because the amount of money that we spend per month is the same as it was 3 years ago, pretty much. But the money that we were paying towards the student loans is gone. We have either increased our bills or absorbed that money into savings or something else that we pay every month. So what we've decided to do is to add, I think like $350 or $400 towards our monthly budget to make sure that we have enough money to cover these student loans. And the reason we're able to do that is because we live on last month's income, and the amount of money that we spend each month is less than the amount of money that we make each month. So our current amount that we spend every month is $3,650, but that is less than the amount of money that we make. So out of the remaining money, the remaining portion of money, we're going to pull $400 and add it to our next month category for our budget going forward. Now, I know it's not easy for everyone to do that in their budget, so be sure you're taking a look at your expenses and your income to see what needs to be done before October so that you can pay these student loans. Now, what can you do if you don't have the money to pay your student loans? So you have a couple of options. I mentioned two already, which is to cut expenses or to increase your income. And those things may not be easy to do, but the other options include changing your repayment plan. So you may need to go from the graduated plan to the save plan so that you can get those payments down to 10% of your discretionary income. That could be a big help depending on how much your student loans are per month. So changing your repayment plan is a good option. The other option is to consolidate your loans. And I do not have any personal knowledge about consolidating your loans, but if you go back to studentloans.gov, there is a link on the left hand side from the page that we were on that says consolidate your loans, and it has all the information that you need to know about consolidating loans there. That could be an option for you. Another option is to look into deferment, and the last option is to look into forbearance. Now, those two options, I don't have personal experience with either, but you can look those up on studentaid.gov as well. So studentaid.gov is going to be your home base for all things student loans. And there are a couple of FAQ pages on there as well. And if you need additional resources, you can look around studentaid.gov. Most of the information is there, but you can also reach out to your loan servicer, which is the company that you're going to be paying your student loans to. They have information for you there. And a lot of people don't know this, but you can also reach out to the school that you graduated from. You can reach out to their financial aid department, and they can also give you some resources. They keep track of people that are not able to pay their student loans, or people that have defaulted on their student loans that came from their school. So you can feel free to reach out to those financial aid departments and see what resources they have available for you there. If you still have questions, leave a comment below with your question and I'll respond to it. And if I don't know the answer, I'll be sure to point you to the correct resource so that you can find all the information that you need. I think that's everything you need to know about student loan payments restarting in October. So as of right now, Kiara and I plan to just pay the minimum balance until we get back into the routine of paying the student loans. And after that, we may pay them back more aggressively, but I will keep you guys updated in our Debt Snowball updates. Now I want to hear from you. Leave a comment below to let me know how you've prepared your budget this month to include your student loans next month. That's all for this video. Be sure to give it a like, subscribe, and click the link on your screen right now for more Well Balanced Wallet content. See you there.